If you want to overpay your taxes, move on. Don't listen to this episode. Hey there, it's Kenner French with vastsolutionsgroup.com. We're going to be talking today about, 6 simple ways of lowering tax liability for entrepreneurs. You're visiting the Vast Vault, where entrepreneurs help entrepreneurs. There are no great secrets generally to tax planning and tax cutting. There's tons of strategies out there. Just sometimes entrepreneurs don't adhere to whatever they are, don't want to pay attention, et cetera, et cetera. Some people, some tax professionals just don't know of them, but there really are no secrets. So, these simple techniques for tax planning can really help you. We're going to, go from 6 to 1. So please stay until the end. I think it's going to add some value, and who knows, maybe it can even save you some money, which would allow you to spend more time with your family because you have more dough in your pocket. Let's talk about number 6, income splitting. Taxes are reduced for the total family unit by shifting income among several family members, sometimes, by the way, or legal entities, in order to get more of the income tax at lower rates. Think about that. Income tax at lower rates, you should like that. It's called income splitting, and it's legal. Everything we're talking about is legal and smart and simple, by the way. That's simple. Put a kid on payroll who's got a little bit lower tax liability. Simple. That's simple. That's number 6. By the way, once again, my name is Kenner French with vastsolutionsgroup.com. We've been in the tax world for years. The company's been around since 1969. Really in 2006 is when it really grew, and now it's a nationwide concern. But anyway, what about number 5? Shifting of income. Certain kinds of income, let's say bonuses, dividends, and year-end payments, as an example, can be shifted from one year to another in order for income to fall where it will be taxed at lower rates, specifically as it relates to a tax year. Now, it really depends on the circumstances, but that's one really simple way. Again, simple. These are simple ways to lower tax liability, all legal, by the way. And these aren't secret. Anyone can do them. So talk to your tax provider. If your tax provider needs some help, have he or she call us. We can help. Or if you need some help from us, just go ahead and get a hold of us. We're one click away. Number 4, shifting deductions. As with income, certain deductible expenses can be paid in one year or the next in order to place them where a tax benefit will be greater. Now, what I should also mention here, now that we're on number 4, we're halfway there. Really, it's up to you to, talk to the tax provider. Every single situation is unique. Your tax provider knows your situation. We don't, frankly. So what I would say is if your tax professional doesn't communicate, isn't good, whatever the case is, then reach out to us. But what I would really strongly recommend is you going back to your tax provider and see if you could do some of these. And some of these could potentially help you. Again, these are all legal strategies that your tax provider should know. Deferring tax. Putting money into certain investments or making pension plan or 401k contributions or deferrals allows you to defer the tax on some income until, a future year. Number 2, we're getting closer to number 1. Number 2, tax deductible expenditures. Certain expenses may be deductible if you meet specific requirements in the tax code. If you structure your affairs to obtain a tax deduction for things you enjoy, again, within stringent IRS guidelines, it's an example of a tax cutting technique that could save you money, again, make it so you can spend time with your family. And finally, the biggest thing that people forget about, that don't take into consideration, it's not a secret, it's just simple, tax-exempt investments. You can select investments that produce income that is exempt from either federal or state income tax, or maybe even both. Some mutual funds, for example, have tax advantages. Talk to in this case, your financial advisor, communicate with your tax provider. If you could find some exempt investments that can save some dough, hey, that means it's going to be less money you're going to have to put in your pockets because you're going to save more. Now, what I would say is, once again, beware. Be aware of there are tax law changes, so everything potentially could affect you. It's what I would say is go talk to your tax provider, meet with your tax provider. You're going to have to pay for this on a quarterly basis. People say, "Oh, I want to talk to him once a year or her once a year." I'm going to say that's not a very good idea. You got to meet with them a little bit more often than that. But anyway, once again, my name is Kenner French, vastsolutionsgroup.com. Hopefully this has been helpful, and I'm one click away at vastsolutionsgroup.com.